In today's video, I'm going to demonstrate to you a really simple trading strategy which works on pound-dollar forex pair. And as you've probably already seen by the title, it uses a profit target using a 2-to-1 reward to risk ratio. That means when you find the entry setup to the trade and you find where the stop loss is, and I'll show you exactly how to do that. Let's say that the stop loss is 50 pips away. Then all you need to do is set yourself a 100 pip profit target. It truly is a set and forget type strategy. And by the way, it works with 1.5-to-1 or 3-to-1 reward risk to ratio 2. Firstly, I'm going to show you what the setup or the entry setup and how to get into the trades. Then I'm going to show you the backtest report for pound dollar going right back to January 2010. And then if you hang around to the end of the video, I'll show you another forex pair which the exact same strategy works really well on too. Some of you are already going to be familiar with this trade setup. This is the setup bar here, because it's one I have done some videos on before, but using different exits to what I'm showing you today. And it's a setup which I got from Larry Williams, which he calls a smash day or a smash bar. So we are looking at daily bars, and the first market I'm going to show you is on pound dollar. Now the setup bar, number one, is the close is less than yesterday's low. So here's the close, and it was less than yesterday's low. So that's our setup. That's all we need to see. Once we see that, at the end of the day, we place a buy stop order at the high of the setup bar. So tomorrow, if price breaks through this, then it gets us into the long trade. Now, if price never does break through that and it stays down here, then we cancel the order at the end of the day and then look for another setup bar or another smash bar. So once we have placed that order at the high, we can then calculate the stop loss, because the stop loss is today's low or the setup bar low. So the stop loss distance would be the high minus the low. In this case, let's say it's 50 pips, the distance. So then we place a third order, which is the target of a 2-to-1. So in this case, we place a profit target of 100 pips. Okay, so it's dead easy. And the opposite is for short trades. A short setup bar is this one here actually. The close is higher than yesterday's high. And then on this next bar here, if prices declined and dropped through the low of the setup bar, that would get us in the trade. Stop loss would be the high of the setup bar. I told you it was an easy trade setup, and sometimes the easy ones or the simple ones can be the most robust ones. Robust meaning that they keep working into the future, hopefully for a long time. Now, just before I show you the backtest results, keen viewers might have seen previous videos that I've done on 2-to-1 reward to risk ratios and how you can't just apply a 2-to-1 reward to risk ratio with a profit target. You can't apply it just to any old strategy and any old market, because despite what you might have read or what people say, applying a 2-to-1 reward to risk ratio across every market just won't work. And that's what my previous videos have largely been about. But of course, in the case of today's strategy, the 2-to-1 reward to risk ratio using the profit target does work. Otherwise, I probably wouldn't be showing you the video. So let's have a look at the trades on the chart and have a look at the results from that backtest. So we're looking at a chart of pound dollar forex pair. It's a daily chart or a 1440 minute chart. Data goes from January 2010 through to the end of October 2022. And I've included 4 pips worth of costs in each trade for this strategy. So looking here, this is a long trade because you see on our setup bar, the close was less than yesterday's low. And then we had a buy stop order at the high of the setup bar, which is here. You might or might not be able to see that small blue arrow. And then we had a profit target. At the moment, I have it set to 2-to-1. So let's have a look at the performance report. 288 trades, a decent average trade size, making 41,000. There's the equity curve, which is quite nice. Long only, short only, and the close to close equity curve. Now, I think I mentioned that this strategy will also work with a 1.5-to-1 or maybe a 3-to-1 reward to risk ratio. So let's change that to a 1.5-to-1. The way I've programmed it, I've set up this simple little input here, which I can adjust the reward really easily. So now we've got our closer target of just 1.5 to 1 reward to risk ratio. There's the equity curve, fairly unchanged. It's actually making more money, so it's probably making more trades. Only a few more trades, 295, and a better average trade value, so that's interesting. Let's have a look at 3 to 1. Even bigger targets here now. In fact, you'll notice on this one here that we didn't actually hit the 3 to 1 profit target because it was probably up here somewhere. But in the meantime, we were still in a long trade, but we got a signal here, which was a smash day for a short setup. The close was higher than yesterday's high, so that was our setup. And then prices broke through that lower, that setup bar. So that was like a stop and reverse trade. We never actually hit the target on that one. The average trade is actually smaller now with a bigger target, interestingly. Making less overall money. And the equity curve's not quite as good, but it is profitable nonetheless. In fact, I have actually run an optimization. Now, this last column here, my reward, that's my input where I can change the reward to risk ratio. So 1 is a 1 to 1. We've seen the results for 1.5 to 1 and 2 to 1 and 3 to 1. But looking at the net profit here, we can see that they're all profitable from 0.5 to 1 all the way to 5 to 1. So that's a good sign. The most profitable being that 1.5 to 1. But I'll leave that up to you to choose which one you might prefer. So that's a pretty neat little strategy which has been working for the past 12 years or so. Next, as promised, I'm going to show you another market that this same strategy works on. But just before we have a look at that, if you like the rule-based type strategy idea or mechanical strategies, then you'd probably like my 22-page Beat the Markets strategy guidebook. And if you use the link down below, it's free to download, and I give away and I show you the exact rules of 3 more rule-based strategies, a little bit like the one I'm showing you here today. But better still, you can enroll in my popular trading course. And in that course, I'll show you 6 more mechanical strategies, which you can trade manually or you can trade in an automated way like I do. And if you're a multi-charts or a TradeStation user, I actually give you the code so you can copy and paste it or import it into either TradeStation or multi-chart straight away. But not only do I show you the strategies, I show you the best ways to trade them, including important aspects like position sizing and strategy monitoring, and there's more. Again, the links for that will be down below in the description. Now, let's have a look at this other market where you can use the smash day pattern with a 2 to 1 reward to risk ratio profit target on. So this setup also works on euro dollar. At the moment, I've got the profit target set to 2 to 1. And that's what the equity curve looks like. So, a little bit lumpy, but definitely going in the right direction. Making 33,000. Similar amount of trades to pound dollar, and an average trade $118 per trade. Let me show you the optimization report I done on the reward. So going from 0.5 to 1 through to 5 to 1, you can see they are all profitable. The most profitable being 3 to 1 this time. You remember 3 to 1 wasn't as good on pound dollar, but it is on euro dollar. This is why it's important to test what works on each separate market. Looking at 0.5 to 1, an average trade of 41, even though I have got some costs, that's still a bit too low for my liking. But interestingly, the most profit is actually made using 0 as the input. Now, 0 as the input is using no profit target whatsoever. And remember, you saw an example earlier on pound dollar when I was using 3 to 1 that we didn't hit that 3 to 1 profit target when we were long because we got an entry to go short. And that's exactly what this is doing. In fact, if I select it, so remember, this is by far making the most money. And this is going to be what's called a stop and reverse. So you'll notice that unless we've hit a stop loss, then we always get into
a trade in the opposite direction, we don't actually take a profit target. Look at this trade here, it was a huge profit, but we never took a 2-to-1 or 3-to-1 profit target. We waited, we exited the trade when we got the setup bar, the smash bar, to go long. So that's how it works slightly differently on euro dollar. Now, if you enroll in my course, which I mentioned earlier, I'll show you my preferred exit, but also a really clever trade filter which really boosts the profits of euro dollar. You can find those links down below.
Well, that's all for this video. I've demonstrated to you a simple trading strategy with a profit target using a 2-to-1 reward to risk ratio. And I've shown you 2 markets that this strategy actually works on. 2 markets, so why not trade them both? That's what I do. I trade multiple strategies in my trading portfolio, which helps to increase overall net profit and reduce the drawdown. Well, I hope you've enjoyed the video. If you have, please give it a thumbs up. But most of all, I hope you've been able to learn something. I hope you can take something away from this video and make some money with it. So why not consider subscribing to the channel for more future videos a little bit like this one. So that's all for this one, but I'll see you next time. But until then, this is Jared Goodwin, and thank you.